Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook for Tuesday, 3rd of July, 2012. At the beginning of the day and from the Asian session and now the single currency shows some attempts of basing, actually finding some ground after a pullback of 127 zone where the recent gains were capped, but not much so far to be expected from the current bounce, as outlook still maintains sort of a negative tone. More positive is seen on the sterling against the dollar, as its recent bounce of 154.84 attempts now through very significant 157 barrier that will open way for further extension higher as a part of the broader uptrend from 152.67. The main winners are commodities, as crude oil remains in the positive mode after yesterday's brief consolidation, finding ground at levels around 82 zone and currently pushing up again. The gains are fueled by a renewed crisis with Iran and the strikes in the Norway. As mentioned, Iran is again increasing tension in the region, as the National Security and the Foreign Policy Committee has yesterday drafted a bill calling for Iran to try to stop oil tankers from shipping crude through the Strait of Hormuz to countries that supports sanction against Iran. The Iranian parliament is vocal and sees itself as independent, but does not hold much power. Bills are unlikely to get far unless sanctioned by the leadership. Also, the strikes in the North Sea, in the Norway's platform, where they are actually again increasing the tension in the oil market and basically giving support for the oil price. More of oil we'll see, more of everything actually we'll see on our technical part. Just to mention that oil is in the near-term price action shows the positive tone and looking for further extension higher, as current tensions would be a good spark for a possible attempt towards our key short-term barrier at 87.00. Similar to crude oil, gold is regaining strength again, and after finding ground yesterday at 1587 zone, where the near-term base was built, currently trading above 1600 level. That was our initial barrier. Again, positive tone and the boost for the yellow metals price was given by after week global manufacturing data released yesterday, rekindled hopes for some more easing from the central banks to support recovery. Recall that yesterday a batch of PMI data was released in the European countries, most of them mixed, but still well below the expectations, and more important, well below 50 point that defines shrinking of the economy from the expansion. So far, most of the European economies are showing a quite negative outlook, with the current crisis in Eurozone seeing more potential for a more negative impact in the economies of the Eurozone as well as world economies. Also to mention that Australian Central Bank kept its rates on hold on the overnight session when they released their rate decision, keeping the main cash rate at 3.5%. As it goes, whether back-to-back cuts already delivered will be enough to insulate the resource-rich economy from global gloom. The Australian dollar has immediate reaction edged slightly higher at the as the Reserve Bank of Australia made no mention of whether it might ease again, though neither did it close the door on that option. The poll of analysts had found all expected rates to stay at 3.5% this week, with analysts still suspect policy could be eased again in August should official figures on inflation for the second quarter due later this month prove as benign as expected. Most of eyes of the investors are now turned towards the European Central Bank that is due to meet on Thursday, where there will be also the the interest rate release, and the lack of any data except PPI due today from Eurozone sees not much movements to be sparked by fundamentals, at least today. A quick look at today's calendar. Sorry, there was a small technical problem. So quick look at today's calendar. Australian building permits for May came in far better than expected and much better than the previous release of April. That was minus 8.7%, and today's forecast at 5.1% with a release of 27.3%. Quite surprising release. Japan average cash earning for May that was released at 1:30 p.m. Came in the negative output, minus 0.8% compared to 0.6% forecast and 0.2% previous release. As said, RBA rate decision was to stay pat at 3.5% as expected. From UK, 8:30 we are starting with European data. Construction PMI for June is forecasted lower from the previous release of 54.4 in May. 53.1 is today's consensus. Net lending to individuals in May is expected to drop to 1.1 billion pounds compared to 1.4 billion pounds in the release of April. Mortgage approvals for May are slightly lower. Forecast today is 51,000 compared to 51.8 thousand in April, and a single one from Eurozone PPI for May due at 9 o'clock GMT, 0.2%, slightly above 0.0% in the release of April. Across the ocean, US release of factory orders for May is due at 1400 GMT, and just slight improvement to 53. That is today's consensus, is seen from 52.9 release of the month of April. And now we're going to take a look at our technical part and see the latest movements of major currencies and commodities. As shows on the hourly chart, the euro has found temporary ground at 152.80 zone, where 55 days exponential moving average and the Fibonacci 38.2% level of 124.06 to 126.91 ascend contained the recent reversal of 126.90, but the slight bounce higher seems to be for now short-lived, as failure to break above the main bear trend line at 126 level, and quick return lower sees the downside quite vulnerable. Negative tone that dominates on the near-term studies keeps the downside still in focus and does not rule out a further retracement of the latest 124.06, 126.90 ascent. Larger picture shows the pairs action entrenched within 124 and 127 range, and basically break of either side would define the near-term direction of the pair. So far on the 4-hour chart, this outlook is still slightly aligned towards the upside, but unless we see the break of minimum 127 level, not much to be expected, and possible further ranging would be the likely scenario. However, loss on the downside of levels at 125.80, 125.50, and the more significant 125 zone would turn again focus towards the a strong support zone at 124.00, loss of which in the short term would be bearish and would be likely looking for extension towards lows at 122.87, low of 1st of June 2012. On the upside, set clearance of 127 barrier would be supportive, and the signal extension of the short-term rally from 124.00 and expose double top and the key short-term barrier at 127.45. Daily structure is still rather negative after upside rejection at 127.00 and a quick return below the main bear trend line connecting 132.82 and 127.45, and unless 127 is regained, where 20 days moving average on the upper Bollinger Band on the daily chart caps the upside, risk is still seen towards the downside and possible return down towards levels at 124.00 strong support, and also close to this we have the ascending bull trend line of 122.87, currently standing at 124.20 zone. Sterling is still congested under 157 zone despite yesterday's brief breaks above this level at 157.21 and 157.19, failing to break higher, staying in rather sideways mode, but the downside remains so far protected by ascending 20 days exponential moving average, but more sideways and neutral tone is seen as long as 157.00 caps the upside. 4-hour chart shows more positive tone and still good momentum, looking for a break above 157.00 barrier that will open way for extension up of its recent rally from 154.84 low of last Thursday, 28th of June, with the main barriers at 157.49 200 days moving average and the spike higher to 157.76, as basically the 200 days moving average kept the upside well protected on its short-term rally from 152.67 1st of June low. As long as the later stays intact, the downside would be still seen vulnerable, as also the daily studies are still I would say weak at the point, while a break above 157.49, 157.76 is expected to trigger fresh rally and fresh extension of 152.67 and basically confirm the higher low at 154.84. Also significant is the break of 55 days moving average through 90 days moving average that are currently standing at 158.20 zone, and they keeping more pressure at the short-term price action. Basically failure to regain an initial barrier at 157.49, 157.76 would still keep risk turned towards the downside. Immediate support lies at dynamic support at 156.90, which is 20 days moving average, ahead of more significant yesterday's platform at 156.40 zone, as well as ascending 55 days moving average at 156.60. Basically loss of 156.40 and 156.30 at 38.2% retracement would weaken the near-term tone and allow for a stronger reversal, and that will keep the 157 level intact for now. A loss of more significant 156, 155.75 levels, also Fibonacci supports, would be bearish, and then focus again down towards 155 and 154.84. The dollar yen has regained some strength again after finding support yesterday at 79.30 after upside failure at 80.00 triggered a strong reversal down to 79.30 where the support was found. Important to mention that 79.00 is a strong support, and the downside breakpoint stays intact for now. That keeps more hopes of a fresh attack towards our upside breakpoint at 80.00. So far the gains broke above broken bull trend line of 77.65, that is currently at 79.73, and regained 79.83, yesterday's intraday high, with 79.84 seen so far, as hourly studies broke above their midlines and all pointing higher, with the 20 days exponential moving average crossover above 55 days one, keeping the pair well supported for possible fresh attempt at 80.00. We have to see the break above 80.00 to open a way for a stronger recovery of 79.30, and possibly to refocus 80.60, recent peak of 25th of June 2012, where the pair peaked, and the subsequent strong reversal brought it back to the 79.00, 80.00 range. Basically, a break of either side of the range will define the near-term direction, with currently the short-term tone still more aligned towards the upside, and still holding closer to the 80.00. That might be good support for possible break above 80 to refocus 80.60 on the downside. Strong support lies at 79.30, and more important 79.00, where is also the close to it is 50% retracement loss of this level to refocus immediately 78.90, 200 days moving average that so far keeps the downside protected in past month or so. Break below the 200 days moving average will be bearish, and will turn focus again down towards 77.65, 1st of June low. The dollar Swiss recent recovery of 94.62 low of last Friday did not show much of the action, as upside was limited so far by a 95.50 zone, close to 38.2% retracement of down move from 96.77 to 94.61, as well as descending 55 days exponential moving average that kept current recovery action capped for now. Fresh strength that is emerging in early hours of European session sees and now focus at 95.50-60 zone, break of 50.70, pardon, zone break of which means the yesterday's peak and the high of last Friday, as well as 50% retracement to allow for some stronger retracement, stronger recovery in the retracement of 96.77 to 94.62. Descend would break above 61.8% retracement at 95.94 and 96.00 as a break point to turn focus again towards 96.77. More negative tone is seen on the 4-hour chart, as so far descending 20 days exponential moving average that broke below 55 days one keeps the upside limited, and unless we see the break above these levels 95.53 and then 95.62, the downside would be still at risk, as stronger descent of 96.77 hasn't seen enough of action, corrective action, as 38.2% retracement capped the upside for now. As said, failure to clear the moving averages would be still seeing risk towards the downside. The initial support is at 95.20, 95.00, a break of which would again turn the near-term tone more negative for test of 94.82, 94.70, and more significant 94.61 low of last Friday, ahead of base and the double bottom at 94.20. On the upside, I set clearance of 96.00 to open next significant barrier at 96.77, peak of last Thursday. That will be signal for some stronger recovery, and the turn basically focus away from the 94.20 base. As said, gold is in the recovery mode in the past couple of days, as bounce of last Thursday's low at 1548 has regained some important levels. First of all, 1600 that might open way for some stronger corrective action, and look for test of our next key barriers at 1633 and 1640, as the downside remains protected for now. The pair, the gold breaks above 55 days moving average currently at 1603, with the daily studies still hovering around their midlines. Firm break above 1600 is required to signal stronger action higher. For our chart, outlook remains positive and supportive, and keeps focus at the upside, with interim barrier at 1620 seen ahead of 1633 and 1640 on the downside. Yesterday's corrective range bottom at 1587 now offers strong support, reinforced by crossover of 22 through 55 days exponential moving averages, keeping for now the downside well protected, and basically only break below this level, also marking a high of 25th of June 2012, would weaken the near-term structure. And finally, the crude oil, that is again finding ground after creating a double bottom at 77.27, 77.54 zone, with a strong recovery seen in the past 2-3 days, increasing the hopes of possible bounce of the recent congestion between 77.27 and 87.00. Basically, 87 is our key short-term barrier, and the break above this level would see some more support for the oil's recovery, and the open way towards next levels at 89.28 and a more significant 92.16 peak of 29th of May 2012. Hourly structure is at this point still supportive, but in a way losing traction, as upside was capped at 84.61 during the overnight session, and we need to see the break above basically of yesterday's peak at 85.20, pardon, last Friday's peak at 85.28 to open way for some stronger recovery. Immediate support lies at 83.34, and the more significant one is 82 zone, the break of which I would say would be bearish, as this also marks 38.2% retracement. Dynamic supports of 20 and 55 days moving averages are underpinning for now at 83.82 and 82.84, and basically break below 82 would delay the short-term bulls in favor of stronger reversal. What we need to focus on the upside is 85, 30, 85, 80 as initial barrier, and the more significant 87.00 recent phase top break of which is to open for open way for stronger recovery. The larger picture of crude oil still shows firm downtrend of its lower top at 106.41 that so far bottomed at 77.27, with some improvement and seen on the studies, and the regain of momentum, seeing a good potential for a retest of 87.00, our key barrier. Also, the fundamentals news are quite supportive for now for the oil, as mentioned in our first part of the session, that increasing tensions in the region of Gulf might be good support for further raise of the oil prices. Also recall OPEC's members' recent comments that quite suitable and reasonable price for them will be around $100 to $120 per barrel, revised from the last year's estimation of approximately $80-90 per barrel. So most likely quite good support from the fundamental side is seen for the crude oil price. From the other side, weakening world economies are increasing risk of further draw of demand for the energies that might still keep strong pressure on the oil price, and possible further extension lower in case of failure to regain technical level at 87.00 to focus strong bull trend, long-term bull trend line at 79.20, recent lows at 77.54.27, and our still downside targets at 75.70 and 74.94, lows of August and October 2011. That was all for today, Tuesday, 3rd of July 2012. Thank you all for attending our sessions. We're back tomorrow morning, Wednesday, at the same time at 7:00 GMT. After this session, we'll have the questions and answers part. Until tomorrow, I wish you a nice day and successful trading. Good luck.